Happy Monday night. Simpler asked me to jump on the mic here for a little bit tonight and cover a few things with y'all, and always down to talk with traders. So happy to be here. So what I want to do here tonight is let's be a little bit vulnerable here. There's a lot of videos. I got a lot of videos. There's a lot of videos here on our channel. There's a lot of videos out there about winning trades. What I want to actually focus on tonight are some of my biggest mistakes of the year and a few of the important lessons that I've learned. So we're going to talk about best and worst trades, but quite frankly, we'll maybe spend 2 or 3 minutes on the best trades, and then we're going to move on to the nasty stuff. But let's get diving in here. So typically for me, and if you watch my YouTube channel, if you're in the options room or my mastery, you're pretty familiar with the kind of setups I like to trade. My best trades tend to be trades taken in the direction of the overall trend with an entry that offers edge. So typically for me, it's going to be a squeeze at the 21. But the real key here is that's where I have my success. Trades taken in the direction of the overall trend. And quite frankly, for the last handful of years, it's obviously an uptrend. So those are typically my best trades. In terms of what defines an uptrend, perhaps that's it's definitely a matter of opinion. In my opinion, I define an uptrend by the following. The stock or the market potentially is trading above the weekly 21 EMA, and the EMAs on the weekly chart are stacked positively. So if you're above the weekly 21, you got positively stacked EMAs. In my book, that's an uptrend. So here's your S&P 500, and to me, that fits the bill of an uptrend, even with the last few weeks of selling pressure you had earlier in the month here, which is going to tie into exactly what we're going to talk about tonight. But to me, that's an uptrend. And this is important because when the market or an individual stock is in an uptrend, the path of least resistance is typically to the upside. In those, 2 to 3 to 4 week windows of what might appear to be nasty selling pressure and kind of the end of the world, typically it's just a pullback to the weekly 21 EMA. Now, granted, because we live and breathe it every day as traders, the daily chart, the 30-minute chart, they might look a little bit bearish, but typically these, 2 to 3 week windows of selling pressure, it's nothing more than an overdue reversion to the mean. It's just the fact it's happening on your weekly chart. The lower time frames, they get tossed around a little bit. But in other words, it can be incredibly difficult to swing short positions in an uptrend, even with bearish signals on lower time frames. So for those of y'all listening, and I'm curious, have you tried to short this market this year? And how's that process gone for you? Because those are the difficult trades, right? Shorting the market this year, especially from a swing trade perspective, every trade is a counter trend trade. At no point, based on my definition of an uptrend, has the uptrend come to an end here this year. Yeah, I've tried to short the market time and time again. Now, in terms of the trades that work in this kind of market, they're trades taken in the path of least resistance, which as of right now is to the upside. As long as that weekly chart for a Google, for the QQQ, etc., fits that criteria, you're above your 21, you got stacked DMAs, you're living in an uptrend. So the easy trades are something like this. You find a bullish stock like a Google, you find your daily squeeze, you sell some put credit spreads, you get a solid push there. And if you look at a few live charts, we'll jump into these right now. But even in this market, they're all over the place. So, Google, that was from a hand, that back in April, May. But look at a Tesla here. Bullish weekly chart, you got a bullish daily chart. This isn't something you'd want to short. You got a trend going here. If you look at a Netflix, these are going to be the easier trades. You're looking for that daily squeeze, you're looking for that moment in time, but you're getting positioned to catch a continuation of the trend that's intact. It's a totally different story trying to short the market. And that's what I've kind of learned the hard way this year. But I've learned some lessons from that. Definitely learned a few lessons. But those are the easy trades. The trend is your friend. You have the wind at your back. And think in terms of how everything is weighted here. If you're QQQ, if you're S&P 500, a few months ago, if you're a communication sector, if they all fit the criteria of an uptrend, then Google's already in a position to naturally want to go higher. So you find something like a daily squeeze here, as long as that uptrend for the market is intact, these are the kinds of setups that can treat you well. So you think of Netflix as of late, you think of a Tesla as of late. I'm sure some of you have maybe traded Affirm, UPST. There's a handful of them out there. The difficult trade is trying to call the top, is trying to short the market. So let's take a look at a little bit of that here. But again, we took that Netflix trade in the mastery. It's a daily squeeze, but you're trading it in the direction of the trend. So the odds are stacked in your favor here. We got at this point, a really modest piece of the Tesla move. We got a few bucks there, nice trade. But that's the high probability stuff. Now, my worst trades of the year have been shorting this uptrend. And this is just one example of many. But this one kind of sticks out to me because, and I'm sure y'all have done this before, we take a trade, the trade comes to an end. In this instance, the trade doesn't work. And then we're looking back at the charts wondering, what the heck was I doing there? Why did I get long? Why did I get short? So when I look back at this daily chart of the S&P 500, in a daily squeeze with positively stacked EMAs, a positive histogram, everything about that is bullish. So why am I shorting back here? It was probably a matter of opinion. The market's extended, the seasonality, we're due for a pullback. Even in my own book, that's as bullish as it gets. So that was just a silly trade there. That was like a $5,000 hit. So thinking in terms of progress as a trader, we go back a few slides to the Google trade here. It does you no good to bring home a profit like that on the higher probability setup in the direction of the trend if all you're going to do is turn around, fight the trend, and give back a vast majority of it. So those two trades right there are polar opposites. Think in terms of probabilities, right? Develop that probabilistic mindset. You're trying to work the numbers here. So when you have something like a Google or you have something like the S&P 500 here in an uptrend with a daily squeeze, a positive histogram, the probabilities point towards you probably shouldn't short that. You're fighting the trend there, right? You're fighting the trend. So you can see in my notes here who would short this. Clearly somebody who's not respecting the trend. Somebody who's not thinking in terms of the path of least resistance. That was a trade just based on my opinion. Now, granted, I'm taking longs, so I'm taking advantage of the big push here. But in hindsight, it's a silly trade. And that's just one of, really too many to count this year. Trades just like that. Now, there's been times to my defense, so to say, where I've tried to short this market when the daily chart wasn't looking as pretty as that. Even still, the weekly uptrend holds. And notice you get the flush there, and a few days later, it's right back to the upside. It's because you're in an uptrend. So the lesson I've learned this year is to not disrespect that weekly trend. And that sell-off on the daily chart, and we'll jump into a few charts here because this is one of my other mistakes. I lose sight of the weekly chart. I'm getting so caught up in that daily, I'm getting so caught up in that 4-hour chart, I'm losing sight of that bigger picture trend. So one of my mistakes is that sell-off on the daily chart that might look like the end of the trend, might look like the end of the world. It's just a pullback to support. And I want to show you that on the S&P here. Such a big part of being a swing trader. By default, we got a little bit of trend follower in us. You would have had much more success over the last 2 years swing trading stocks to the upside than swing trading them to the downside. So we tend to get very caught up in the individual stock side of things. If you've been long Tesla over the last year, an Nvidia, a Google, an Apple, it's the trend in the market that's making all that possible. So let me get these charts up over here. All right, but let's look at a daily chart here of the S&P 500. So this is one of my bigger mistakes this year. Living too much in the shorter time frames. Granted, a daily chart, I wouldn't really call it a shorter time frame, but my point here is, check yourself before you potentially wreck yourself. Take the 2 to 3 seconds to take a look at a weekly chart, and maybe that nasty pullback that looks like the end of the world is just a really buyable dip to weekly support. So we had our recent flush over here. We can't even call that a flush. Maybe we can call that a flush. This is all pretty modest flush action here. Got a little flush over there. But the point being is, we as traders, we're living and breathing every single session. So from the very top here to the very bottom, the vast majority of us, we're watching every minute of that. So we feel all of it, we live all of it. When you're living through that kind of selling pressure over the course of 2 to 3 to 4 days, and it's nonstop, it's consistent, and the ticks are bleeding out, right? And there's all that emotion everywhere. It's so easy to lose sight of the trend. And that's one of my bigger mistakes this year. Now, from a whole nother perspective, we'll have to go live another time. I've also gotten shaken out of great long positions on dips to weekly support. So the weekly 21's been a big thing for me this year. But if you look at these moments in time where it looks like, oh my goodness, here we go, right? The top is in, and then CNBC is breaking out the markets in turmoil special. If you look at a weekly chart, it's just a dip to the weekly 21. So thinking in terms of ebbs and flows of a trend, what does a trend typically do on any time frame? Typically builds energy at the 21 EMA. You're typically going to get a good maybe 2 to 3 ATR push out of it before you come back to the 21, take a breather, and then continue the trend. So that kind of week to 2 weeks of nastiness on your daily chart, tough to short that because you're shorting what appears to be the end of the trend into major support. You're trying to short this, you're shorting into major support, major support, major support. So now this time around here, it's very much the same thing, right, guys? Got the big flush. We're living and breathing it. So we're sitting through 2, 3, 4, 5, 6 straight days of selling pressure. But really, what's going on here? You built up energy near the 21. You got a big, nasty push out of this one. We were overdue for a pullback to the 21. We pulled back to the 21. We chopped for maybe 2 to 3 weeks here. And now it looks like the trend has certainly continued. These are all characteristics of an uptrend. And an uptrend is really difficult to short. If you look at a daily chart, though, it's easy to lose sight of that. Think of how nasty that feels in real time. We're down 1%, 2%, we're down 3%. The next day, we're down 2, 3%. You got negative internals. You got VIX going crazy. Histograms, squeezes are firing short. There's so much emotion involved in this. Nobody tends to bat an eye, right? Like no one's batting an eye right now after the market's rallied for, 8 days in a row. But something gets triggered for whatever reason. When we flush to the downside, everybody likes to panic a little bit. And if you just flip it to a weekly chart, you got to make sure you're not aggressive shorting into a completely normal dip down to weekly support. And in the context of that uptrend, these are your best buying opportunities. Is the dip to the weekly 21. Now, with all that being said here, I did short the market on this flush. I still have the short position. Obviously, that ain't working right now. But the key is that I've learned my lesson through the previous times I've tried to short the market this year. And I've made a few adjustments. And I want to show you a little bit of that. Because we're all going to make mistakes as traders. We're all going to try to maybe, buy the dip, and buying the dip just doesn't work 3 or 4 times in a row. We try to short the market, it might not work. We're going to make these mistakes, but the key thing is, are you taking lessons from these mistakes? And are you taking those lessons to improve your game? So the lessons in the short term, they might cost you a little bit. You're kind of paying your tuition to learn that lesson, so to say. But in the long run, it can be profitable. So lessons learned, right? And this is the key right here. Don't short it like a downtrend. What do I mean by that? Well, in an uptrend, when the market pulls back to the daily 21 EMA, I'm looking to take maybe a 5+% position size. Things are really good, maybe 10, 12% risk. I'm selling my put credit spread. I'm building a decent sized position looking to play the trend. That works because the trend is working in your favor. So long as the trend is alive, that's going to work in your favor. Don't short it like a downtrend. What I mean by that is one of my biggest mistakes this year is I get my short signal or I'm compelled to short for whatever reason, but then I jump into a trade and now I'm structuring a trade as if, the path of least resistance is actually to the downside. I'm putting on big position sizes. I'm selling, out the money call credit spreads. Risk rewards not in my favor. I'm putting on short positions that would work great in a downtrend, work horribly in an uptrend. So the major thing I've learned is that if you're gonna try to short the market in a weekly uptrend, anywhere above that weekly 21, regardless of how ugly your daily chart looks, you got a 1 hour squeeze firing short, VIX is popping off. My new rule is so long as we are above the weekly 21 EMA, any short I put on the market, or a stock for that matter, is going to be low risk, high reward until the trend shifts. In a downtrend, I'll play it a bit more aggressively. But now I'm looking for small positions on option strategies that can result in, call it a home run if they work, but at the same time without causing major damage if they don't work. Because the trend is your friend, and you don't want to let your shorts in an uptrending market cause major setbacks. Obviously, it's wasted time if you have major setbacks, but then it also stings a little bit. There's a lot of opportunity in that uptrend. It's tough to give back a lot of forward progress and go backwards trying to short that uptrend. So those are a few of the key things I've learned, but that's the biggest thing. Don't try shorting that market with a structure, a risk tolerance, and a mindset as if you're in a downtrend. Certain strategies work in an uptrend. Those strategies will not work in a downtrend. Vice versa. So low risk, high reward, I think, is the key. And the key is, hey, if I take this short and the market actually rolls over, then maybe I'm in a position to hit a home run. But if this market just rips in my face and just goes on another epic rally, am I setting myself back 10, 12, 15%? Or am I maybe taking a little paper cut on that short and now I can work around it? In other words, is it still going to sting 4, 5, 6, 7, 8 weeks down the road? And if we're not careful and you try to aggressively short, and this goes for any trade, if we're not careful with position sizing, if we're not careful with trying to get in line with the trend, it's easy to have those setbacks. And the math here of the setbacks, right, this is key. So you have a $100,000 account. And again, just the theme of the conversation here, right? You try to short the market, you take a big position, you lose 10% of your account. Now you're at 90K. To get back to break even, to get back to your 100K, you got to grow the account by 11%. If you go backwards 15%, you got to grow it by 18 to get back to break even. You lose 20%, positive 25 back to break even. And if you lose obviously half of your account, to get back to break even, you got to double the new balance. So kind of an extreme example there, but the math of a setback, it's really important to understand that. And that, I think, is one of the easiest ways to have setbacks as a trader. And remember, it's a probabilities game. So in no way am I saying, hey, get long every daily squeeze you can find. If the market's in an uptrend, it's going to work every time. Obviously not. Say the market's in an uptrend, and this is how I think you want to think about it. Say the market's in an uptrend for your next 50 trades. Would you want the majority of those trades to be shorts? Or if you knew the market was going to be in a consistent, steady uptrend for your next 50 trades, would you want them to be long? You probably want them to be longs. You're probably going to work those numbers a little bit better there. So that's kind of what I've learned is the key here. Put yourself in a position where, and take this mindset and apply it to anything that's counter trend. And this is not a trade suggestion. I would not do this, but kind of an extreme example. Obviously, Tesla's going berserk today. Probably not the kind of thing you want to put 20% of your account and short it tomorrow. You're completely going against the grain, as extended as it is. You go short that with 1% of your account Probably not going to make or break you either which way. But you put yourself in a position where your short could be a home run if the market actually throws in the towel, but also put yourself in a position where you can easily work around that trade. Now, so as traders, our primary goal is to move forwards. We come to learn over time as we get more experience. There's months, and I would argue, at least from my perspective, we haven't had a month like this, maybe since, early August. But there's going to be months where it's very easy to make forward progress. It's almost like the fish are kind of jumping in the boat thing. Then there are going to be months, and you know what? And October is probably a good example, where it's okay if you just stand in place. You make 1%, you lose 1%. You're not going backwards. But that's what we want to avoid doing, is going backwards there in a major fashion. So a few weeks ago, and again, did the market ever break weekly trend? No. So one could argue, what the hell you're doing shorting it? And I really want to give you too much of a counter argument, other than I'm not shorting it like I would have 4, 5, 6 months ago. I'm not putting 10, 12, 15% of my account into an out the money call credit spread, risking 12% to make like 4 or 5%. I'll do that in a downtrend. But the major lesson learned is buy myself a lottery ticket and then move on with life. Because if you short that market, right, and maybe some of you, you might be in this position, you've been in this position, you short the market 2 weeks ago. It's so easy to sit there like a deer in the headlights. Is this thing just like kicks your choppers in? And we'll jump back into the charts here in a few minutes. Like this reversal, whatever you want to call it, the last 5 or 6 days, it's nutty. It's low volume. It's just like total retail trader central. But regardless of what you want to label it, if you're short and if you're short heavy, it's so easy to just sit there like a deer in the headlights. And that's where you start going backwards. So the key is buy that lottery ticket until you're in a downtrend. But the reason you're buying that lottery ticket mainly is that, hey, if you're dead wrong here, in this market, once again, rewards the buy the dip crowd, you're not mentally caught up in your short. Right? You got to show up every day ready to take action. All right, that's not working. What's the next easy trade? Can I sell a put credit spread? Can I, get a long in here? Can I do an iron condor? But if you're just like, you're taking it on the chin in a major fashion, the last thing you're thinking of is what's my next trade. So what we did a few weeks ago in my masteries, we sold an in-the-money call credit spread on the SPX with a short strike of 4,300. Basically placing a bet that on November 5th, or leading into November 5th, SPX will be trading just under, or ideally very much so under, 4,300. Complete opposite direction at this point, right? On this trade, though, we risked about 3% of our account to potentially grow it by, depending on your fill, 7 to 8+%. That's what I think. It doesn't have to be an in-the-money call spread. It could be an out-the-money put debit spread. It could be a put butterfly. But you're in an uptrend. And I'm speaking to myself here. We're in an uptrend. I was doing the complete opposite of this beforehand. Triple, maybe quadruple that position size. And I'm maybe going to get a 30, 40% return on my risk. Like in a downtrend, sure. We're in an uptrend. So we risked about 3% of our account to potentially grow it by 7 to 8%. Now the trade result is to be determined. At this point, I'm trying to do the math in my head here. The market would have to puke like 6% over the next 2 weeks. So unlikely this trade works, right? If it does, home run, grand slam at this point. But because we didn't take big size, because we're in an uptrend, we've been able to work around the position. So here's a screenshot of the trades we've closed this month in the mastery so far. And this is just based on like a $50,000 account. The trades that we've closed about 1,500 a profit. Now we've got a put credit spread on the QQQ. We've got an iron condor here on the QQQ, which I think we're going to be in great shape on. So if we hit our targets on those, 2,000 and change of profits closed on closed trades this month. That covers all and more of the max potential loss on that XPX trade. Now, we're carrying that into November, And yeah, we're gonna have to do a little bit of work here to take care of any little bit of extra leftover we got here from that short position. But the difference is, because that trade didn't work here, we're not deep in the hole. We're not closing Tesla put credit spreads at IWM and condors and earnings trades just to try to recoup a quarter, half of those losses. And that's a position I put myself in a lot this year. Now, granted, because of the ridiculousness of this market, I was able to quickly turn things around. But let me be very clear on that. It's not a good position to be in. You start putting heavy capital to work, like things can quickly get very sketchy when you're trying to play catch up. And it's not a skill I think you want to develop. Because that market where it's easy to, make that 5-6% loss, that market's not always going to be there. But it's time wasted. So that's kind of the major things I wanted to touch on tonight. And you can apply this to, specifically trying to short the market in an uptrend, but a lot more of it is mentality. Mentality and the understanding that trades taken in the direction of the trend, if you take 100 of those trades, you probably come out on top. If you take 100 trades going against the trend, you probably get ran over. So I think a few things to take from this, but real quick, let's jump into a few charts here. Let's take a look at where the market is right now. Make sure we're good to go over here on Restream. Let me get caught up in the chat, see if we got any questions. Get caught up in here. Why didn't I tell you Tesla was going to 1,000? Well, I don't know if you saw my this market keeps grinding here. I don't know if you saw my weekend notes on Twitter. Kind of laughable notes at this point, but the headline of my weekend prep, line number 1: will the path to 950 for Tesla unfold without a single dip? Yeah. Never mind a dip. How about you just can't even touch 910 to 950? And then I'm asking myself, all right, I got to go revise those notes now. Does the path to 1,000 unfold without a single dip? Yeah. So, I mean, what are my notes at this point? 1050? 1100? I mean, berserk, right? Berserk, guys. It's extended beyond every, stretch of the imagination here. Does that mean a damn thing in this market? No. So it's probably the last thing I would try to short. But let me show you how bonkers this is, right? And yeah, I had to sell some deep, crazy out the money puts here today. And bought a couple calls. I was playing around. All right, check this out though. See, that's when the market's wacky. You got me over here scalping calls. What the heck am I doing? But look at the ridiculousness here. 1,500 calls, right? So mind you, we're trading at 1,000. So a little bit of math here would tell you that's a heck of a move. But there's premium here. So if I had a 8-figure account, here's what I would do. 30 cents of premium, yeah, I'd take it. If I had an 8-figure account, all right, that's a little excessive. 10 mil for 30K, but you get the point. There's ridiculous premium here. So essentially what this means is this party ends bad Thursday or Friday for a lot of retail traders. There's 20 cents at the 1800s. Whew. Wild. Yeah, Lewis, Sam was talking about that in the options room earlier. Absolutely. Absolutely. No, John Wick, it's at the end of the day, it's an uptrend. An uptrend is never going to be an easy thing to short. But again, just the thing I wanted to cover tonight was the major lesson I learned. Make it a paper cut. Right? Make it painless. Make it, that same mentality we would probably have if we walked into the convenience store and grabbed a scratch ticket. To structure a trade in any other fashion until the trend shifts. And I'm talking, we're trading well under the weekly 21. Histogram has lost bullish momentum. No more positively stacked EMAs. Red 10x bars. I mean, we haven't had that since the vid. That's where I think aggressively shorting would work because you get the pathways for resistance to the downside. But that was my biggest mistake this year. Way too much size, not the right risk reward. Essentially trying to short the market in a fashion where if it didn't work, it was going to matter. And then you're chasing your tail trying to play catch up. 2, 3, 4 weeks goes by, you played your catch up. It's just so much wasted time. Oh, Jeff, is that what this is? You got to be kidding me. Is this the test? Is this the Tom Brady Tesla rally? You got everything going here, right? Apparently you got Tom Brady on their side now, so probably hits 2,000 tomorrow with Goat Brady behind you. You got Hertz ordering, I think, like $1 billion worth of cars or something silly like that. Oh, he did the ad for Hertz. There you go. Okay, so you got the duo there. You got Hertz and Brady. I mean, yeah, crazy, 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 guys. So here's what I'm telling myself, to sleep at night with Tesla. It's finally in motion again. So what would surprise me a lot is if Tesla pulls back, and then it's just dead in the water. And it's not like a short-term thought. It's more so, I'm very surprised if a few months from now we've just pulled back and we're going nowhere. In other words, we've broken this weekly consolidation. The weekly squeeze is fired. You're in motion. So imagine a bunch of trapped water finally found a crack. So now all that pent up energy is in motion here. For conversation's sake, just to kind of drive home what I'm thinking here. Say over the next 6 months, again for conversation's sake, Tesla goes to 2,000. I would like to hope there's going to be the pullbacks, there's going to be the daily squeezes, there's going to be more than enough opportunity to build that good solid position to catch the continuation of that journey up to 1,500, up to 2,000. Now, mind you, I was saying the same thing a few weeks ago about, well, I don't think we're going to go from 760 to 1,000 without a pullback. Silly me. So, crazier things have certainly happened. McNeil, I hope not. I hope not. We were talking about this in the options room earlier, though, and I'm guilty of doing this, right? Like in Amazon right now, I just have like this disdain for it. Like you're really this whack? You've been in a weekly squeeze for over a year, but you could have had that same mentality with Tesla, and it completely falls off your radar. You want to be paying attention once that histogram turns positive. Um, Very easy, and again, guilty myself here. Yeah, Netflix is a total chop fest. Like this isn't going anywhere. So these weekly squeezes, while they can be so drawn out, and quite frankly, so difficult to trade on shorter time frames in that chop, man, when these things go, it can get pretty wild. So I say that to say, does Amazon ever grow up here and commit to a real move? Thought about it for a few weeks, but the water was just too warm. Had to come right back in. But definitely easy to start. You start to lose sight of something. Yeah, but that histogram starts to go positive. You get some positively stacked EMAs, a couple green 10x bars in there. A little daily squeeze action starts to paint a nice, pretty bullish picture. Hey, I'd take that ride again. But for now, it's a chopper. It's a chopper. John, I mean, I agree, right? I think people are dying for a stock split here. I think, I guess it depends how much, say Bezos has. Excuse me. To my knowledge, he was always against it. But he's not the big chief anymore over there. But that could very much be the catalyst. So that would be solid. I'd say whatever it takes to get Amazon going here. We'd probably be all for it. Yeah, you bring up a good point there, LP. Wasn't Hertz hitting that bankruptcy button not that long ago? Now they're slinging Teslas. But do y'all have any charts you would like to take a look at here? You got any questions? I touched on a few things I want to touch on tonight. The quick summary would be respect the trend. And if you're going to go against the trend, buy yourself a lottery ticket. Don't buy yourself an opportunity to have some major steps backwards. Maybe Lauren Sanchez will get the stock split going for us. But we did have Facebook earnings tonight, so when I got y'all here and I got some charts, I'm curious to see. What was the expected move for the old book? $20. Talking 350-ish, 348. We're trading 336. Long time till the open. Doesn't seem like fireworks just yet. Chandler Horton, thoughts on Roku? Who let this guy in? They did background checks at the door. Chandler, thoughts on Roku? Probably going to pop out of nowhere and I'll miss it because it's Roku. And it's what it does best. Just looks like there's nothing going on here and then bananas. Chester, I need a squeeze somewhere. Just give me a squeeze somewhere to work with. Not a profound statement, but after 1, 2, 3, 4, 5, 6, 7 weeks of basically being pinned in the same range. Pretty bold bet here. My bet would be 6 weeks from now, you're not in this range anymore. You don't want me going into the Ichimoku cloud. All I know is cumulonimbus. Ken, let's check out pins. An interesting one. Now, Chandler, you might know something. You might know this. What's the deal here? Are they getting bought out or no? Wasn't PayPal going to buy pins? Was that a one-day event there? But Ken, in terms of pins here, keep in mind you do have earnings in a few days. So always got to take that into consideration. But let's pretend earnings isn't in a few days. To kind of touch on a few of the things we touched on tonight in terms of trend. Based on my rule book, you are in a short-term downtrend. You're under the weekly 21. No positively stacked DMAs. So what you're looking for at this point, if you're looking for a long, you're looking for exhaustion of bearish momentum and you're looking for buy signals. So a few ways you could look for that. A simple way is on the histogram here. You're looking for more yellow bars and then you're looking for light blue bars here. So there's that shift of momentum. You're typically not going to get a bounce without at least your shift of momentum. So kind of a tough call here before earnings, but that's what you're looking for, at least what I'm looking for. If something's under that weekly 21 and everything's kind of sloping to the downside, if I'm looking to play it long, I'm pretty much looking for bearish momentum to disappear on my daily chart, my 4-hour, my 2-hour, my 1-hour. And then I like the ready and fire buy signals. But it's the shift of Momo there. The shift of the Momo. McNeil, no deal. Howie Mandel says no deal. So what does PayPal do after that? PayPal isn't quite sure what to make of it all here. But for Airbnb, it keeps coming up in the scan, so it's got good structure. Earnings next Thursday. So at this point, it's a matter of strategy. The put credit spread, it wouldn't make too much sense at this point, especially not for next week's expiration because of the IV. And even if you go 30 days out, there's still a little bit of extra IV there. So the push into earnings trade would be, probably one of the few instances I think you can buy slightly out the money calls and not have to worry about premium decay. So for conversation's sake, typically if you buy 175 strike calls that expire next Friday and the stock just goes sideways, they're going to start to quickly decay the closer you get to next Friday. With earnings around the corner, they should hold their premium. So one of those times you can try to catch that, you can try to catch the move in the stock there without having to worry about the premium decay. They won't go to zero, put it that way. So Lewis, Celsius, I think is a good structure. What surprises me about this one, yeah, what a beauty, is only monthly expiration options, which that's not the end of the world. You can make that work. But being that it's earnings season here, at least for me, it just kind of rules out the put credit spread. Earnings on the 11th. I think you can only sell put credit spreads, or you can only. Yeah, I'm pretty sure you only got the monthly here. And November 19th expiration. So the put credit spread wouldn't work to your advantage. Now, is that a good excuse not to trade it? No, because the structure is there. I mean, let's be real, right? And again, I think I've kind of gotten to the point as a trader where I'm not going to beat myself up if I don't hit a home run month every month. The big mistakes, the big time steps backwards, it's all kind of self-inflicted, right? It's a position sizing, it's a risk management thing. One of the major things I'm looking for as a trader in my progression is the elimination of that kind of stuff. Where I think we all want to get to is, if we get to the point where a bad month for us is maybe we're, up 1-2%, maybe we're flat, maybe we're down 1-2%. But these -10, -20, again, we saw the math there. It takes a while to kind of build that back up. So I can say, hey, through the month of October here, as we've kind of been all over the place, if you kept your shirt and you made a little bit of forward progress, that's solid. There is the other perspective, though, and I'm just being real here. Markets under the 21. In plain English, the structure of the daily charts here for both the S&P and the QQQ, they kept me out of taking long positions. To be frank, they just kept me out of taking long positions. Now, once we got back above the 21 here, it's like launch control. 0 to 60 in 2 seconds, just takes off. So part of the difficulty of this month is even if you've been patient, being patient ain't working to your benefit. And by no means am I saying, hey, let's go out there tomorrow and let's just lack total patience. But it's the market we're in. So go ahead, be patient like I was looking for a better entry on Tesla. You ain't getting it. Be patient like I was in the options room this morning, waiting for a better entry on a firm, and then it rips 4 or 5%. Tough market. Not just a tough market if you short it. Tough market if you've tried to follow some of your rules here. Everything just keeps pumping. Everything keeps pumping. Now, many of us know when this party ends, it typically ends in a pretty nasty fashion. But extended does not mean the end of the road here. So for me, when I kind of take a look at things this month, those are thoughts you got to stay away from those kinds of thoughts. You got to look at your book of business. You got to look at what you did. Did you make money? Did you lose money? Were you break even? You're going down, a nasty road if all of a sudden you start playing that game of, well, I could have made X amount on Tesla if I bought it at plus 5 ATR. I could have made X amount on Netflix if I broke every rule in my book and bought it at 3 ATR. There's going to be markets, and this is probably the best example we had in a while here. There's going to be markets that they're going to continuously reward bad behavior, so to say. Tesla's at plus 5 ATR. Apparently, in this market, it's a good entry. I'm saying all this to say, if you followed your rules this month, then good on you. Be more proud that you followed your rules and didn't break them than you would be if you broke every rule and bought the most extended stock on the market and made a few bucks. So if there's any of you in here who you didn't catch the 200 points in Tesla, you didn't catch all this craziness out here, if you didn't catch that because you were sticking to some of your rules, then good on you. That's good trading. It's good trading. One of my rules is markets under the 21 EMA. I'm looking for 2 closes back above the 21 before I put on long exposure. My 2 closes above the 21, we're already pumping here. All things to be mindful of. Oh, John, I mean, look at some of the calls, right? Just pull up the options chain. Crazy, crazy stuff. And that's what makes it harder, I think, for a lot of us. And this is a nasty side of social media, right? Or just, being really in any trading community, there's always somebody killing it. There's always somebody killing it. And I know for a fact, I go on Instagram right now, I can probably go find 20, 30, dudes, 20, 30 girls, like you said, John, making big time retirement money on this push. So, major thing I want to drive home is if you've been following your rules, good on you. Right? Say this big circle here represents the next 20 years of your trading. Following your rules is going to serve you well for the vast majority of it. There's going to be these little chunks of time where following your rules has you sidelined, missing all of the quote-unquote easy money. But if you got good rules in place, they'll serve you well in the long run. And with that, I sleep a little bit better at night. But yeah, so Facebook's out of the way here. What's up? What's tomorrow? You get all the giants this week. The Apples, the Googles. Kind of one last thing here, y'all, before I let you get on with the evening. I'm sure we got some NBA tonight. It's okay as a trader to just have nothing. And that's where I'm at, in the options room right now. I've got nothing. What are we gonna do? We're gonna buy Tesla at the moon? Probably works, right? Yeah, probably works. But for discipline's sake, tough to get long here. Also, for discipline's sake, there's not a sell signal or a short signal in sight. So remember that as well, especially during the Octobers of the year. It's okay to not have a good grasp of what's my plate of opportunity here. I think for the last 2 years or so, it's been very easy to kind of walk around with that confidence in what you're looking for. We're in an uptrend. Here's the stocks in uptrends. Here's where I want to get long. You got a really good grasp of it. This thing starts wiggling a bit here, getting a little bit frisky. It's completely okay to be able to say, hey, I got no clue what I'm working with here. I don't know if going long is the answer. I don't know if going short is the answer. Just so long as until you have that answer, you take it nice and easy. Take it nice and easy. Ken, you think turnaround Tuesday? Which way we turn it around? Turn it around down? Turn around Tuesday? We're going to need something here. Turn around Tuesday. Whipsaw Wednesday. We shall see. We shall see. I mean, Ken, especially with the S&P 500. And again, guys, I can't stress enough, like in this kind of market, it might not mean anything at all, but we're extended. So every part of my book says, hey, you be careful getting long here, and we're due for a pullback. I think we've learned, though, this is a grinder. I mean, look at this, right? So this is why you got to be careful. You got to know the market you're in. There's going to be the nice, cool, calm, and collected markets, or the ebbs and flows are really, well behaved. And then you're extended on the first of the month, and you're even more extended on the 30th. It can grind. It can keep grinding. So pick your spots wisely. And I think one adjustment I can do a better job of making is dial down the time frame. Right? And I love calling myself out on this stuff because I think it's how you get better. So, typical me. I like a firm here, y'all, but it's extended. Is that really extended in this market? That's pretty modest in this market. So I'm sitting there today. I'm like, all right, if we get a dip to the 8, a dip to the 21, we'll take it. It's just not the market we're in. Like these things are on steroids. They're all kinds of juiced up here. So dial down your time frame a little bit. Yeah, that daily squeeze at the 21 EMA, I think it's a lot of our favorites. In this market, though, it might be that 30-minute squeeze. Now, for me, it should be a no-brainer because the characteristics are the same. I want my 30-minute squeeze to look just like my daily squeeze. Positive histogram at the 21 EMA, stacked EMAs, green 10x bars. So if I had done a better job here, or if I do a better job here of adjusting to this environment, and typically as soon as we do that, the entire environment changes. So maybe I'll take one for the team here. There's your entry last week. So if you've identified, a firm here is one of the stocks on crack, you probably don't get your dip to the 21. You chop it at that 8 EMA, take your criteria, take your edge, dial it down to a 30-minute, dial it down to a 1 hour. If you're really feeling freaky, you dial it down to a 15. All food for thought, y'all. All food for thought. No, Chris, it's not normal at all. Yeah, no, it's not normal at all. Like in our I got other moderators at Simpler like hitting me up throughout the day, like collectively trading for like a crazy amount of time, and we're just going back and forth like, what the, what? Like it's just silly at this point. Guys, we were just looking at Tesla calls. 1,500 with some premium there. And you know what? It might not be the craziest idea. Yeah, Chandler, exactly. Exactly. And that's where I gotta, that's where I need to say, all right, here's the environment we're in. We're on crack. Dial it down. Go find my edge, which is the squeeze. Building a position in the squeeze. And Chad, I know you have your after hours on, but the principle still applies. There's the edge. It's the same, right? It's the same entry that I love so much, say, back here. All the same principles still apply. You're building up energy at your 21. The squeeze puts you in a position to catch the release of that energy. You're looking for 2, maybe 3 ATR, but you're operating down on a lower time frame. There you go. So I got to be able to say to myself as a trader, hey, does that not fit all of my criteria of a squeeze? A good squeeze? Does that not fit all my criteria of a bullish squeeze? So definitely a great point, Chen. Definitely a great point. But yeah, Chris, not normal. Does not mean it stops. Does not mean it stops. So can't stress that enough. The volume's kind of pathetic. It kind of feels like a playground for retail traders. who were just kind of punch drunk on a bunch of sugar juice. But when does the party stop? That's the big question there. That's the big question there. Yep, the plunge protection team doing what they're doing best. Doing what they're doing best. All right, let me see how we're doing on time here, y'all. Yeah, John, it has to end that way. It has to. There's going to be a good chunk who are just making out like bandits this week on these out the money calls. I mean, I bought an at the money call earlier. It doubled. I did not catch the double, but it doubled. So there's money being made here. The 1,500 calls. Again, if I had all the money in the world, I would definitely fund somebody's long position on those calls. Put it that way. Nice work, McNeil. Yeah, the market needs a surprise test. So yeah, that's the thing. The last thing I'll say here before I let y'all go, I think they kind of carved me out an hour here tonight. We're filling up the hour. Don't marry your idea. Okay? Now, the benefit of me doing the mastery, and being in the options room, but specifically as of late, the mastery, like I can't get away with any BS. Like if I take this short and then just like let this thing kick our teeth in, I'm gonna have people knocking at my door. It's like the beauty of it is like I got to take action here. Like forces me to do what a trader should do. But if you marry your idea that we're gonna just get decimated here, and guess what? Like for what it's worth, and it's worth nothing. I did think we were gonna flush. Did the weekly chart ever break structure? No. So it was a silly thought. But I did think, yeah, we're gonna puke here. So I was confident in the fact that I think we're gonna roll over. But I didn't sit here and let this thing just like smack me around. If the market wants to dance, like you want to tango, baby, then let's tango to the tune of 150 points. There's got to be something in here I can do, right? Even me. Sell some put credit spread, some condors, shuck and jive, right? A little bit of rope-a-dope every now and then. Yeah, so we'll end up on that, Lewis. I'm not so much a day trader either. And you got to know your strong suits. Again, I bought a 1,000 strike Tesla call today. 5 minutes into the trade, I was like, why do I do this shit? Like, I'm trying to go walk my dog. I'm trying to go for a ride. Now I got to sit here and babysit this thing. It just, for my personality, it doesn't work. I know plenty of personalities where they would go nuts trading my strategy. So I'm kind of with you on that, right? Like, I like my swings. I don't like to kind of have to make my decisions real quick. Never been too good at that. Don't dial it down to a day trade. Potentially just dial it down to a shorter term swing. So, for example, in my mastery today, I wasn't trying to sit here and take this on the schnoz. I'm going to take my criteria, what's a high probability pitch, and I'm going to apply it to a 4-hour, a 2-hour until I find what I'm looking for. And for those of y'all that are familiar with my trading, it's the same pitch. Give me a squeeze. I want to add the 21. I want stacked EMAs. I want green 10x bars, and I want positive histogram. So that 2-hour time frame, right? You take the same principles that apply to a daily chart as far as what makes it, bullish, where the odds stacked in your favor, but we're just shortening the time frame a little bit. So you take your rule of thumb with the squeeze. A good squeeze can give you 5, 6, maybe 7 bars of momentum. 2-hour squeeze fires long, there's a potential for 4 to 5 to 6 2-hour bars. These are great for a swing trade into, Friday, into early next week, 5, 6 days, that kind of thing. So not completely taking it down to a day trade point, but taking what you would typically swing trade on your daily chart and bringing it down to a lower time frame. And again, that's my bad as of late, right? So have these same discussions with yourself as a trader if you get significantly more profitable in the long run. Like I love this kind of stuff. Like now I can take my notes, and next time the market won't put the bottle down, it's like, hey, don't sit back and wait for that dip to the 21 EMA on a firm. This thing's still moving and grooving with all kinds of momentum. Right? Take my moment in time and look for it on a lower time frame. Like, yeah, that for me should be a trade all day long, all day long. Now, where have I gotten away from this? Why have I gotten away from this? Because of the market we've been in. We rally, we pulled back, we chill for a bit, daily squeeze, get long, catch the push. Right? We pull back, daily squeeze. It's been a swing trader's market. It's been in everybody's market, but it's been the perfect market, until as of late, for me to take my pitch. Right? Here's my daily squeeze. I'm going to sell my put credit spread. I'm going to give it, 3 to 4 weeks till expiration, and then I'm going to go disappear for a bit. It's not this market, unless you got the pleasure of buying something like a Tesla. That's it, brother Nicholas. If you got rules and you follow your rules as a trader, you deliver the results. And if you hate the results, then you just got to change the rules. But at least you know it's not a you problem. No, John, I wouldn't say so because him and I were seeing different things here. For me, I'm very much so, like, I live in a bubble. So when I'm looking to short the market, it's got to be based on, here's in this instance, a daily squeeze fire and short. Now, the beauty in that mentality is that there's a very clear uncle point. Like, hey, this daily squeeze ain't fire and short anymore now, is it? Like, I like those kinds of trades where I'm not, all that proficient, so to say. It is looking at things like interest rates and looking at things like the dollar and trying to take, some seasonality aspects and trying to put all these things together. That's never been my skill set. So whenever I go long or even here short, other than that stupid ass trade I took back in, what was it, June? Excuse the French, but that trade from the slide there, that was just dumb. What I like about that mentality, why it works for me, is I know when I'm wrong. Like I know when it's time to start playing some defense here. Like, hey, I can sit through that bounce. That's a normal bounce. At this point, it's time for me to start playing some defense. Now, I've tried to trade in the past, right? Because some of my earlier education was on like the economic side of things. So the dollar, treasury yields. In the past, I've tried to trade based on those kinds of things, and where it didn't work for me is, again, now I'm marrying an idea. Where now I'm shorting something or I'm going long something because I think this, and this is going to come together and cause a reaction. That would work at times, but the problem for me was, when am I wrong? So for conversation's sake, if I'm short in the market based on another asset class or something of that nature, where's my uncle point? Like, where am I wrong? Where do I want to shift course and take what the market has to give me here? So hopefully that makes sense, John. Yeah, good work, McNeil. Right. You got to adapt. You either sit on your hands and enjoy some time away from the charts, or you adapt. But there does become a point you come to the market with your agenda. Spanking shall be given out. But listen, y'all, I appreciate you spending an hour with me tonight. It's been a good day of talking some trading here, and I'm looking forward to doing it again tomorrow. But I appreciate you. So I hope I've given y'all a few things to take into consideration, maybe think about here tonight. And I look forward to doing this again. So who knows? Maybe next time we do one of these, maybe maybe the path to 2000 for Tesla will have unfolded without a single dip. One would think unlikely, but thinking in this market doesn't seem to get you too far. But I appreciate you guys, and you ladies. Have a good night, and I'll see you. Let's see, tomorrow morning. Yeah, I'll see you in the options room tomorrow. Looking forward to it. Oh yeah, and don't forget we got the get that free PDF for y'all, so check it out.